I want to welcome everyone, especially for today's class. Okay, so today I want to look at a few things in the forex and crypto market before the new week. Okay, so I want to see how I can be able to teach one or two things before the new week. Now, this is to carry everybody along and not to keep some people in the dark and make some people feel like, okay, maybe some of the things we are doing is magic in the group. No, what we're doing is not magic. So all the things we're doing is systematic. We have a systematic approach to everything we're doing. Now, it's painful to see that the people who come to my DM to ask me that they want to learn forex trading do not join free classes. The people who come to my DM to ask for free signals do not join free classes. The people who want to learn forex and who want to make money in forex do not join free classes. It's very, very painful to see that. But to see what we're not doing these classes because of them. We're doing these classes because of those who are ready to receive value and those who are ready to win in the forex and crypto market. Alright, so today in today's class, what I'm talking about is professionalism in trading. Professionalism in trading, because I have some mentees now who are not professional in trading. Maybe because they learned a few from me, which I feel that they need to be able to move from that level into another place of professionalism. You need to put professionalism in your trading screen for joining in for meets, which is our recorded video. We're gonna have issues with seeing the screen. The screen is properly recorded. But for those who are joining in with Google Meet might have issues with getting to see the screen. Okay, so the screen is being shared, and I said I'm going to be talking on professionalism in trading. That's the key part I want to really dwell on, because it has been something that has been giving me a little bit concern about those I'm mentoring in trading. I said this during the review session: you will never be profitable if you are not professional. I'll write it down. You will never be profitable if you are not professional with trading. Why is this so? You are dealing with algorithm. Always remember that you're dealing with AI. Okay, and the fact that you're dealing with AI tells that you're dealing with something that has been predicted will be smarter than mankind or humans from next year. That's what you're dealing with. So how can you outsmart something that has been programmed to outsmart you? Don't you understand? Now, trading can be profitable. Someone wants to join the meeting. Let me just admit all of them. Please, when you come into the meeting, just mute your mic so that we can be able to have a quiet scenario. Trading can be profitable. Okay? Trading can be profitable. Right? But there is no profitability in gambling. Do you know why we tell you that when you lose in trading, you don't need to come in to that trade again immediately? You might need to wait till the next day. It's because of AI. The algorithm is programmed to know when somebody wants to revenge. So you lost money, you are planning to revenge the market, then AI comes for you. You don't trade like that. That's lack of professionalism. Yes, of course, you might say, oh, because I'm new, I lack a few professionalism in trading. But you've been in this space for a while. You've been in this space for like 6 months. you can begin to put some professionalism. You a few things that you can do to be professional in trading. Let me show you a few things. Okay, avoid gambling, avoid over trading, avoid many positions, avoid money exposure, trust systematic repetition. Repetition. Systematic, should I say repetition? Systematic. I want you to understand that what I mean is your strategy is systematic already, and then what you're doing ought to be repeated. So it should be repetition. Repetition. Okay? So you need to avoid a few things I said you should avoid, and then you need to do that one I said you should do. Trust systematic repetition. Let me now show you what I mean by that. Let me show you what I mean by that. It's very simple. Very simple. Profitability is in over time. Okay? Let me write that down too. Profitability is calculated over time. That's why we tell you that past results doesn't guarantee future expectations or results. So the guy traded $1,000 to get $6,000. He might not be able to do it again the next day. So there is no law that said that you traded $100 to $500 today, okay, and that tomorrow if you do it you repeat $100 to $500. It's something you need to be very aware of. The algorithm is not foolish. It has been programmed. So this guy has won. It's programmed. Don't you understand? So because of that, you need to understand what you are risking. So that's gambling. That's unprofessional. The correct and the only way to do such kind of trading for you to now say that you are professional is when you're trading $100. The right thing to do is you're going to risk less, target more, several times, different days. Before you think I mean several times for the same day, different days. Okay, so let's say for this $100 you are risking 1%, which is $1, okay, and you targeted $5. You see that, right? And let's say you won and you got the $5. You did it again, you lost. If you do it again, you're not supposed to lose $5. That's bad risk if you lose the entire $5. If you do it again, you ought to lose, let's say, $3. So you still have $2 left, right? Okay, you do it again, you lose. You shouldn't lose everything. Maybe you lose and maybe you get $2. Okay, that's 4. You do it again, maybe you didn't get anything, 0. You're still on $4. You do it again, maybe you didn't get anything again, 0. You do it again, maybe you now won, you now got 5. It's now 5 plus 4, which is 9. So I'm back to the recording. So I said your $100 now becomes 109. Are you saying that's how to trade professionally? Your equity has increased. So now as you are trading 109, it's different from trading $100. If you repeat the same thing, that's why I said professionalism trading or profitable trading is when you trust systematic repetition. So if you repeat this thing that was done before, the following week you're going to have 118. If you repeat it again, you're going to have 136. If you repeat it again, you're going to have 142. If you repeat again, you're going to have 184. If you repeat it again, your 100 will double. You will now have 18 is 32 now, so you're going to have 328, something like that. 328. Okay, sorry, 84 will double. Sorry, so you're going to have two. So this one will give you 8. Okay, that's 164. So we're gonna have let me just use my calculator. I've been using my head. I don't know the figures that are now in my head again, so let me just use the calculator. So 84 plus 84, and then that's 168. So I wanted to add this 168 now to 100. That's where my brain was now doing something else. Okay, 268. So we have 268. Okay, so so it's actually correct with what I just said. I'm saying that as at this level, you will notice that the $100 has doubled. Gamblers want to flip account in one day. They want to flip account immediately, but you can actually flip account in days. That's the professional way of trading. Gambling is not professional. So look at this journal, for instance. So you have a journal like this, and then you have dates, you have your entries, you have your rules, and then you're able to see what profit you're making in the day, what your account size is, and whether it's increasing or reducing. That's actually what you systematically play out in what I'm showing you here. Okay, that's exactly what I'm showing you here. So when that is repeated, let's say this is first week, this is second week, this is third week, this is fourth week, that's 1 month. First week, second week. So in 1 month, 2 weeks, you have doubled your account. In 3 months, you have tripled your account. In 4 months, so profitability in trading is measured over time. If you're going to be successful, yes, I know you see the Lamborghini, you are carried away with all those Lamborghinis and all those flamboyant lifestyle which some forex traders put out in the space there. But what you need to know is that these guys understand the basics of trading. Forget about the fact that yes, trading is not gambling, but there's gambling in trading. So do you rather gamble now that you are still growing your capacity, because you ought to grow first to a certain capacity? Would you rather gamble when you have grown your capacity, or you'll be gambling now when your capacity is not yet grown? And this is why sometimes we post entry on the free mentorship group, and then when we post entry, we start seeing the entry go in an opposite direction. What you don't know is that if, take for instance, your account balance is let's say you have $10 and an entry is posted, you go in with lot size that can expose all the $10. The first thing algorithm do most times, not all the time, is it comes to take out the $10 before it goes in the direction. And then there's somebody who is wondering, why is it that anytime I come into this trade, it's always against me? Why will it not be against you when you don't know that algorithm is programmed to look for liquidity? You are the liquidity. So the broker, somebody says some brokers are manipulative. Before, if you have a business, won't you look for how to make more profit? So you say the broker is manipulative. Will you start a brokerage and not want to make money? If you are entering a market with $10 and you're risking more than 20% of that money, you're looking for trouble. You become the liquidity. No professional trader will risk all his money in the market. So the brokerage sees it. Okay, the professionals are in the market. The big players are in the market. What are the big players risking? What are the retailers risking? Retail traders like us. What are we risking? That's what the algorithm checks. So, and then the algorithm, like you said, is manipulative, may manipulate into those people who are exposing more, because they are now the liquidity, they are now the money. The AI is looking for the money. So, but because of our professionalism, we that are professional traders, that on no account, I don't risk more than 1% of my money. I don't do that. Can't remember the last time I did that. I think over a year ago. I have never risked more than 1% of my money in Forex trade. I used to do that when I was still very unprofessional. Well, right from when I keyed into my professionalism, I stopped. I only risk 1%, maximum 2% of my capital. So when the algorithm, which you said is manipulative, comes into the market and sees me in the market, he already knows if I go for this guy, I'm only going to get 1% of his money. So he doesn't come for me. So I am not the liquidity. I'm not the liquidity. Now I'm not saying I'm going to win all trades, because the algorithm was also checking. So but I know that I have my system in check. If I don't win the first one, I don't win the second one, I'm cutting the loss. Okay, if I don't win this one, I'm going to lose just a little. If I don't win this, I'm going to lose just a little. Then the one I'm not going to win, I'm going to make sure that the win covers up for the losses. And then when I lose again, I cut it. But some people, they lose too much and gain too less. So the last thing I'm going to say before I close this class, before I go into your questions and contribution, is on the aspect of the strategy which I taught you. Because some might be wondering, I'm not sure if he's still using the strategy. I'm still using the strategies I taught you. I just made a few of changes which I said in one of our review session, of which I know a lot of people were not in that review session. So okay. The only thing you can see is for those of you in the this thing. I made a mistake. I disconnected the class because I was trying to open YouTube. Sorry about that. I used the same browser to open YouTube instead of opening a new tab. But I'm back now. So I'm opening the YouTube on the other side. Then I'm sharing the screen again so that you can see what I'm about to show you. Because I want to show you some of the decisions. Okay, it's the decisions I made with regards to the strategy. So if you come to our YouTube channel, you find the strategy which I taught you. You find the video. the best day trading strategy, and our previous videos which I've used to explain a lot of things to you. And then you find out that there were these lines which we used to use, psychological level lines, um, psychological level, price actions, all those lines which we used to use. They're very beautiful. All right, if you are going to teach anybody trading and the person is a novice and the person is starting from the beginning, you're going to use those lines. Now let me tell you what those lines do. They're like graph. They're like graph. They're like handwriting. For those of you in the educational field, you observe that when a child wants to learn how to write, you got to use handwriting to show the child how to draw the lines, to join one edge to another edge to bring out beautiful writing. Now, but that child gets to another higher stage where he does not need writing, he now draws flexible. So your question is, where are now the lines that he's supposed to use, to join one edge to another? His psychology, his brain now becomes the invisible lines. So you can start teaching someone just as I started teaching you with these lines, also teaching myself, because as I'm teaching you, I'm learning as well. But you see, there is a few that this line can do for you. Let me show you something. Let me show you what I mean. So the first one we normally turn on is smart money concept by Lux Argol. The second one we normally turn on is ICT kill zones, pivots. Then okay, let's use these two first. Then we go to settings, right? And we're able to turn on fair value gaps, premium and discount zones. Okay, everything turned on. Very beautiful. Now let me show you what this thing does. I said trading is what 80% fundamental, right? And then 80% 80% psychological. I made a mistake on that. And then 20% fundamental and technical. Take note of that. So if you think you've done the fundamentals, please, if you're not seeing anything, drop a message to me on Google Meet. Don't drop it on the group, please. If there's something you're not seeing, drop it on the Google Meet. I think the Google Meet has a message side, so that if you drop it on the group, there can be some miscommunication, and then the people there are not even in this meeting. Sorry about that. Let me share. The thing is, this presenting option, you have to keep anything you want to show, you have to go and click on it to show what you want to show. If I click on the entire screen, okay, let me see if the entire screen will work. Okay, it has finally worked. It was not working before. So I'm sharing the entire screen. So if I go to trading view, let me see if you're seeing, yeah, you are seeing trading view, because I'm on trading view. So I'm showing you now. Who is trying to join again? Meeting that is ending. Okay, so I'm showing you now that these lines, there's something they do. That's why I said trading is 80% psychological, 20% fundamental and technical. A lot of people argue this, but let me show you what I mean. These are technicals, right? The lines and everything, very correct. Technicals. Fundamentals, yes, news, what is happening in in the markets, with financial institutions and all that. But that will not make you win. That will not make you win. Seriously, it will not. It won't make you win. It will only help somebody who is a novice, who is just coming into this space, to be able to navigate his beast, to be able to navigate and now understand, oh, okay, so this is what this candle, oh, so this candle got rejected here because there's an order block here, okay, and then it now rested here for a while because there's an order block. Okay, that's what it does. It just helps a novice to be able to understand these moves, change of character and all these things. But it cannot help that novice to become profitable in a long run, because these lines and technicals will make you not to see some opportunities. That's another higher truth again I want you to now understand in trading. So when you hear sometimes professional traders will tell you to clear your charts, that's the reason, because these things will not let you see far. For those of you who say you want to catch long trends, you want to see far moves, you will not see it with all these things. That's why I started taking them out of the charts. Not that I'm not using it. Now, why do you not see? Because it is psychological. So I'm taking this entry, for instance. I'm taking this entry from here. Let's say I want to sell from that point. Okay. Psychologically, I will not want to target the strong low, which is here. I won't want to do that. Psychologically. Why? Because I'm seeing another block here. But if I use my invisible eyes, I'm not seeing an order block here. Okay, but I have already calculated that when price comes to this, I will take partials, but I'm targeting down here. That's one psychological thing that does to you. It helps you to see obstructions. It helps you to see limitations. It helps you to see that move might not go far. Then look at this, for instance. If you're on the 4-hour chart, you see that, okay, this is bullish, and you're like, oh, I want to go bullish. And the next thing you see the candle now doing like it wants to go bearish, and then you see it now wants to go. That's what 4-hour time frame does. 24 hours does the same thing. 1 week does the same thing. 1 hour. That's why we tell you as a day trader, make your entries with 50. It's only 15 minutes that doesn't do that. 15 minutes is the move once you catch it. 3 minutes is the move once you catch it. 1 minute move once you catch it. The only difference between 15 minutes, 1 minute, and 3 minutes is that 1 minute will give some, should I say, touches before it moves. 3 minutes to touch it before it moves. 15 minutes just moves. You can see it. See 15 minutes moving. Now put 3 minutes and see something. You see that this move, okay, this long move here came, did like this. Okay, so it doesn't just move straight. So 15 minutes is the entry for a day trader. That is the entry for the day trader. So when you are now psychologically trying to see a chart, what you do is you look after studying the dollar index. So you look, when you look, the chart ought to be clear. The London, Asia, and all those rules of ICT money that will tell you when this one close below this, those things will limit your mind to an extent. So because of that, you got to clear the charts. Let me show you. Remove all the indicators. Have an invisible eyes for those things, because now you have left that elementary stage of trading where you use those things. You are now in a higher level of trading, which is the level where you ought to put in professionalism. This is why I started this class by telling you about professionalism in trading. Okay, so now you are now professional. You are no longer a quack trader. You are no longer a novice. Let me use the word novice. Quack is a little bit insultive. Let me use the word novice. You are no longer a novice or a newbie. Okay, or in slang they will say Johnny just come. You're no longer a Johnny just come. You now understand what is in the game, or what's in the industry. Let's not use game, because game has to do with gambling. So what happens is, you now look. When you look, what are you seeing? Like for me, see what I'm saying. For those of you following my chart, you see that these days I just put an arrow. I do like this, and then I do like this. What does it mean? It's simple. Very simple. It's telling you that once there's a confirmation for up move, go from here. Once there's a confirmation for down move, go for here. So what do you wait for? Wait for confirmation. Simple. And what are the confirmations? Smart money concept. Those rules which I've taught you, price actions, all those things, order block. So they are no longer on the chart, but you are using them with invisible eyes. So once you get a confirmation, the chart to be cumbersome anymore. But if you're still growing and you feel you've seen it, you can still be using it. But I'm just telling you why you might not catch those moves. Just look at the moves we are catching. I've cleared the chart, so I can't show you right now because I've cleared the chart. Let me just go straight to, okay, just look at moves that we're catching. Just look at moves. Look at this one. Look at this one. Okay, this is far. Okay, look at these ones. Look at that first move. You can't catch these moves when your chart is full, with lines. Those lines will psychologically make you feel like it will not get to the TP. Do you understand? It will make you doubt your BE, your break even, because you want to put your break even where those lines are appearing. Then another major reason is because indicators lag. Let's go back to the charts. I know you can see the screen. Another reason, I'm trying to round up, but the more I'm trying to round up, the more there are things I still need to teach you are coming up. Because indicators lag. I'll turn them on again. See it. Smart Money by Lux Ago. Then ICT Q zones, pivots. Okay. Indicators lag. That's one of the biggest problem again. So you see this place, there ought to be an order block. The order block might not appear when it was supposed to appear. It now appears later, or it appears early. You're seeing the order block, but the order block is supposed to have disappeared. So it puts you in another uncertainty. In forex trading, you're already covered with so many uncertainties, which you don't know if price is going up, you don't know which price is going up, which is what makes forex trading difficult. Forex and crypto. Don't you understand? Or which we say, if anybody could actually know that, okay, this is where it's going and that person is going to be a millionaire, everybody would have been millionaires. The reason why everybody is not millionaire, some people lose, some people gain, is because not everybody is able to predict it correctly. You only try to predict. So you already have uncertainties already in the market telling you, oh, I don't know if I should go up, oh, I don't know if I should go down. And then you now have an indicator increasing your level of uncertainty. This is psychological. So an indicator is coming to now tell you that he gave you an order block too early, or he gave you an order block too late. And how about mitigated order blocks? Sometimes you see a mitigated order block still pointing in an indicator. You see a mitigated order block still pointing. Order block that has been mitigated, that ought to be off. Let me show you. This one looks mitigated. Let me show you what I mean. Go to 3 minutes. When you come to 3 minutes, let me show you what happened on that order block. Why is the order block not showing on 3 minutes? Let me check 5 minutes. I wanted to show you something, because okay, it showed on 5 minutes. Let me now show you what I mean. Let me show you what I mean by it's been mitigated. When an order block has been used or has tested, it's been mitigated. So it might not use again. So it might just still be there because the indicator is still keeping it there, but it might not have strong effect on price again because it has been mitigated. So it's best when you use your invisible eyes. So your invisible eyes works better psychologically. So now take note why we don't tell you that trading is 80% psychological, and then 20% fundamentals and technical. So you feel you have the fundamentals correctly, you feel you have the technicals correctly. How about the psychology behind that trade? Think about it. So what I wanted to show you didn't come out very well for 5 minutes, but let me see if I can see it here. Okay, look at this order block, for instance. This order block gave this move, right? And then price came up, back to the order block. You can see it. It's been mitigated, but the order block is still there. This price, because that order block has been mitigated, might take out that order block. Even if it doesn't take it, it will swipe liquidity after the order block and still go down if it wants to go down. So, but if you use invisible lines, you already know that this order block has been mitigated, but you should pay close attention to. So that's why I took out all the indicators. I used them for a while and got to the stage where I now understood how the indicators work, and then the drawings, I took everything all out. So what I do is, for those of you who's been following my free mentorship, you notice that I just come to DXY. Then look at how I catch the moves. This is very professional, very, very professional. I've used these ones, so I'm going to take them out. I'm going to take them out. Now look at the psychology now I use. Very good psychology. I just come, I read these charts. I looked at them, of course, from higher time frame down to lower time frame. So I look, okay. This is a bearish retracement, okay, from 4 hour. I go to 1 hour, I look again and see, okay, bearish retracement, but has given a bullish move a little bit. Someone's trying to join. Meeting is already ended. Okay, so I look again. I'm like, okay. So bearish retracement, but a short bullish move, so I can catch shots. So that's what's called counter trading. So this is a bearish move, so that means I should be buying GU, right, for long moves. But if I catch any sell on GU, it should be short. That's what it means, because I'm counter trading. If I take a long on sell, I'll be in trouble. Okay, that's what counter trading is. Then go down to 15 minutes. You will now see that the bearish move, which is this, has just observed a long, from 15 minutes, a long bullish retracement. So because of this, all I need to do is, okay, since my entry will be on 15 minutes time frame, I just come here, just give me this range first, this range of liquidity first. Give me this liquidity here, or order block, anyone. Give me this liquidity here. Okay, brother Cletus taught us on trading in zones, trading within zones. Okay, you've really seen the zone here now, right? This is a zone, this is a zone, this is a zone. So all I need now is this liquidity to give me whether it's going up or down. How? Confirmation. So if I get a confirmation that it's going up, I am looking out for buying DXY. So if I'm looking at buying DXY, I've already calculated from here to here to take a while. Okay, so that means I'm going to be selling GU. So what I do is I just go straight to GU or any other correlated pairs. Talking on the free signal group, but on the VIP signal group, I post other pairs. So I just come, I'm like, no, this thing is, I'm going to be selling. So what do I now do here? I don't just go in. DXY does not just tell me to go in. It just tells me what I should be looking out for. So I was like, okay, I'm going to be finding out sales. Okay, there's a liquidity here. Okay, so what I do, I now stay on the system. Then you see me, I will now post on the group. I'll now come and say, okay, down this way or up this way. This is the best psychology. This is the best psychology. This is the best way to perceive and look at the markets. Your eyes can now catch a lot of things. So what do I do now? It comes to this liquidity as I expected. Remember, I'm looking out for sales, and I begin to find the sell confirmation. That's my entry. And let me give you a secret. When you see a trend like this, price is coming down to the next liquidity. That's all. Sometimes though, it might want to play anyhow, because market is not 100% predicted. So that's why you have to now break even. So if you come into, let's say, this entry from here, let's say you come into this entry from here and you're selling, and from the beginning you were correct to this point, start breaking even, so that if you're not correct, it takes you out and you break even. If you're correct, wait for it to go to TP. That's your massive profit. Alright, so that's all I can take in this class. I've said a lot. For those of you who came in late, I talked on this, I said a little bit of it on review. These are some of the things I wrote on notes. I just show you that we've said a lot of things. We talked about professionalism in trading, okay, and how to be profitable, how gambling is not profitability. So many things we talked about before you came in. So what we're going to do is that you're going to see the video when the video is posted on Facebook and on YouTube. So what we'll do now is to take questions, suggestions, and contribution. So I'm going to turn on. What we're looking at now is how we can have professional traders. That's what we're looking at now. We don't need gamblers. We don't need gamblers. We don't need people that are inconsistent with growth. There should be consistency in your growth. Don't you understand? I said a few about psychology, and now you now know why I do some of the things I do. It's because of the psychology behind it. There's a psychology with indicators. There's a psychology with lines. There's a psychology behind it. So this line is supposed to get to that liquidity, or rather price is supposed to get to that liquidity, but there's a psychology with a particular line telling you that it may not get there. But if the line is not there, you're able to understand the chart in that side and say, okay, if for any reason price doesn't pass this place, I'm going to be expecting price to pass that place. See the psychology, right? I'm going to be expecting price to pass that place, but if price doesn't pass that place, I'm going to be breaking even. But if a line was there, there is already a fear telling you it will not pass that place. See, two different psychologies. It is that psychology that puts a lot of traders in predicaments of which they are not profitable. And then the other initial things I said, for those of you that joined from the beginning, are also psychology. All those things I said are psychology. When I said you will never be profitable if you are not a professional trader, it's psychology. There's a professionalism you must put. If you don't put in that professionalism, your psychology will be wrong. And once your psychology is wrong, you will not be profitable. If you like double $100 to $500, you will lose it after 1 week. You will lose it after 1 month. You will lose it after some time, because your psychology is bad. Your system is bad. And I said trading can be profitable. There is no profitability in gambling. Some people are rather gamblers than traders. I said you can gamble because there's gambling in trading, but trading is not gambling, but there's gambling in trading. So you can actually become profitable over time, make a lot of money, and then gamble. You can't be gambling when you are still trying to build $100 to $1,000. You'll be inconsistent. So I said avoid gambling, avoid over trading, avoid many positions, avoid money exposure. Then I said trust systematic repetition. That's what professionalism is about. Profitability is what is called. Profitability is calculated. Sorry, remove that other L. Profitability is calculated over time. Then I said past result doesn't guarantee future expectations. The guy said he flipped $100 to $500. He wants to now do it again. It will not work. Algorithm is not foolish. It doesn't always work like that. Do you understand? Because past result does not guarantee future expectations of results. So there has to be a system. Look at it. Trust your systematic repetition. So the system is, okay, this guy is risking 1% and he's going to repeat it, let's say 10 times, 20 times, of which you can see the journal is already showing. So he's repeating it many times. What is now his profitability? He will now calculate it over time. Okay, on Monday I lost this. On Tuesday I gained this. On Wednesday I lost this. So on Friday, this is what we got throughout the week. I'm profitable. You do that again the next week, I'm not profitable. You do that again the following week, I'm not profitable. When you do it over time, then you can be able to calculate profitability. Profitability is not measured by what you did one day. There's only novice traders that do that. Professional traders understand what I'm talking about. So let's take questions, answers, and contributions. So if you want to say something, maybe you have a question, you have a contribution, or you have a suggestion, just unmute and just speak. I'm going to mute myself now. Can go ahead.
Okay, afternoon, Pastor Sam. I definitely don't have much, but I just to ask your opinion between the different charts.
Please, can you say it again? I was on microphone. I just took it out.
Okay, I said I don't have questions. And everything is like more personal inquiries. There's not for me, but the only thing I'm trying to find out is the difference between different charts, like Wanda, Pepperstone, and the rest. Because last week,
Okay, so the thing about charts is the thing about charts is charts are not the same. Truly, charts are not the same. And that's why we have a different. Let me see if I can share the entire screen again. Okay, charts are not the same. That's why we have different options. Like if you come on GPUSD, you see that we have Wanda, FCM. These are different websites, applications, softwares, showing what they perceive. So they're going to be different in different ways. The best thing is just look out for the particular chart that works for you. Then, to my own advice, with a good psychology, is stick to one. Take for instance, look at me now. When I'm dealing with GPUSD, I only do Owanda. I know some traders, professional traders, who don't like Owanda. I only do Owanda. Do you understand? Now see where you have issues. If you analyze with Owanda, that GPUSD, you now come to forex.com, it will still look the same. But if you look very well, you see that there are differences. That's where you might have issue. The only thing I can say to this is they will never be the same, because these are different programs bringing out different charts. But the best thing to do is to stick to one, and stick to the one you are using. That's why if you look at charts on MT5, it's different from what you see on MT4, because it's different programs. For those who understand programming, you understand what I'm saying. So they might not exactly come out all at the same. TVC has its own. For DXY, I noticed that DXY does not have Owanda. If not, I would have preferred to use Owanda on DXY, since I'm using Owanda on GPUSD. So DXY already has capital, IS index, and all these ones. So but I only use TVC. See where you'll be wrong. If you use TVC today and you say, hey, this is where DXY is going, tomorrow you now come, you type DXY. Instead of coming back to TVC, you now go to NASDAQ. Okay, no, this DXY NASDAQ. You now come to index. You will have different charts. You will have different charts. It will not come out exactly the way the TVC came out initially. So you will now begin to have confusion in your chart, and you're not sure what to expect. So that's the only thing. Because I am not a brokerage, and I have not designed charts, so I am not I don't control charts and all that. So but to my understanding, what I can say is that the charts, like you said, are not the same. They're actually not the same. So but you need to stick to the particular chart you use in doing your analysis. So let's not bother ourselves with why are they different, right? Like I said, it's different programming. Let's just focus on sticking to one. So if you're using the one that, you stick to one. That you're using TVC, you stick to TVC. Whichever one you're using, stick to that particular one. Okay? The reason why we don't use MT5, MT4 is because of how they appear, because they are on mobile devices. But I know someone who uses Dr. Terry, that's the owner of Quaco. He uses MT5 to analyze charts on the system, and that's what he prefers. Anytime we're together, he's always using his MT5, MT4 on the system, and that's what he uses to analyze his chart, and that's what works for him. This thing is about what works for you. So he sees the chart, but not on phone, because it doesn't come out well on phone. So he uses it on the system. So stick to the particular one that gives you chart. Don't use maybe Wanda today and use TVC the next day. It will give you different views, and that might affect your trading. So any other one?
There's no. Thank you.
You're welcome, sir. So for any other person, we've said a lot in the class, but I know for those who joined lately, you might not have heard some of the things I said, but it's fine. The video is recorded, so the video will be there. You can watch it anytime that you like. Questions, contribution, suggestions before we end and close. In terms of any question, contribution, or suggestion, I'm going to close. But before I close, I want to tell you something. Don't focus on the luxuriant life of or lifestyle of a forex or crypto trader. Don't focus. If that's your focus, or rather, let me use it the way one mentor said. Don't focus on the money you want to make. Don't focus on it. If you focus on it, chances are you're going to lose, because that's psychological. Focus on the system. So the system is about repetition. Okay, so when I repeatedly carried out this system, what did I achieve in a week? When I repeatedly carried out this system, what did I achieve in a month? When I repeatedly carried out this system, what did I achieve in 3 months? That is actually what in turns becomes this luxuriant life. So some of the professional traders you see that lives the luxuriant life, or the luxury life, I'm using luxuriant, the luxury life actually, the reason why they live that life is because they have consistently built something in past. So the guy started trading $1,000, but now he's worth $100,000. He can afford to do certain things. But you are there, you're not even up to 1,000, and you want to get to 100,000. You cannot if you don't add professionalism in your trading. If you don't check a few things, if you don't fix certain things now, these things I'm pointing out to you now, you will never be profitable. You will never get to that level. So these few things I'm pointing at now is what I'm talking about. So as long as your psychology is in check, your fundamentals are in check, your technicals are in check, congratulations, you'll be very successful in trading. But if your psychology is messed up and you feel you are very good with technical analysis, you're not going anywhere. You will make $100 today, tomorrow you lose it. But that's what the AI is programmed to do. I told you about not closing. I talked to you about trusting your moves. I may not have mentioned in this class because I've said a lot of things, but it's part of the psychology there. So you did an analysis. Your analysis, you already said price is going to this direction. You did not now wait for price to get to that direction. You now closed. Price now went there. You now say, hey, and I saw it going there. Oh, you have bad psychology. Your psychology is very bad, and if you continue like that, you will be broke in trading, because you're going to lose all your money in a process of time. You're going to keep repeating that thing. It will always, listen, it is because of you that candle gave that move to make you think like it's not going to go in your direction, because the algorithm knows that you were in that trade. So it was because of you. So it's because of you. So you're going to take your eyes off the chart and trust your setup. So in that case, you see it going to take the loss. Like on Wednesday when we took our loss, you think I wouldn't have said, let me close at 10 pips loss so I don't lose more? No, if you keep doing that, your psychology is bad. If you had calculated and said, I'm going to lose 20 pips on this and this is what I'm losing, take it. If it happens again, take it. If it happens again, take it. Keep taking it. So that's why we always say, give what you can afford to lose. Keep taking those losses. based on what you've calculated. When it now comes to profit, repeat the same thing. Your profitability, if your risk management is okay, will now exceed your losses. That's how it works. You're going to repeat it. So not you now see the thing going to yourself in anger and close. And if you keep doing that, your psychology is bad, and that bad psychology is going to keep you in that predicament, and you will not be wealthy in this trading journey. Okay, so see you in the next class. Time's up. Alright, thank you so much for joining. The videos will be out there for anyone who wants to see it. Thank you all for joining. So I wish you well in your journey, and I hope that with these few things I've said, you'll be successful. See you soon.